What's up, guys? Welcome back to the channel. Thanks for tuning in. Today we're going to talk about Thorchain. What is Thorchain? Guys, this one is a game changer. But anyways, guys, if you guys are new to the channel, go ahead and smash up the like, subscribe to the channel, hit the bell notification. That way you guys are notified every time we make a new one. Alright, so why is Thorchain such a game changer? Well, first off, guys, this sucker has been pumping like crazy. This thing came from like 2 cents, and now it's already worth $9. Massive gains right there. What is that? 9,000x? Yeah, crazy X's. Look, 112,000%. Man, just imagine if you invested $1 in this. If you invested $1 in this, you would have $112,000. I think that's right. Yeah, that's right. That's crazy, guys. Crazy. But anyways, guys, what is Thorchain Rune? What is it? What are they looking to do? How are they changing the game? Well, guys, currently we have a bunch of centralized exchanges. We have other DEXs, and we have other different exchanges as well. But here's the problem. So Uniswap's problem is you can only trade ERC20s. Now, why is that a problem? Well, because you're using a pegged BTC. It's not the actual BTC token you're using. However, with centralized exchanges, not your keys, not your crypto. So you're sending money to a crypto exchange, and it's kind of like, what are they going to do with it? What if they shut down? What if they don't accept my deposit? What if they hold my funds? Well, I don't know. The only other one that is close to this is Shapeshift. However, Shapeshift is not decentralized like Rune. So what you need to do on Shapeshift is you can actually link up your ledger and you can swap BTC for Ethereum. But here's the difference between Shapeshift and Rune. Shapeshift, you're depositing Bitcoin into Shapeshift's wallet and then they're sending Ethereum back. So there's a centralized feature to it. However, with Thorchain is entirely different. This is going to be launching on April 13th. This is their Asgard DEX, or Asgard DEX. So how does this work? Okay, well, first you need to link up your wallet. You need to get a wallet set up. You can use like a key store, or you can, I think they're going to be having an integration maybe with a ledger, but we'll see. They're going to have their own announcements on that and how it'll work. But let me show you how this works, and then I'll show you something that's currently working right now on the Binance Chain, which is Bepswap. So look, you can actually trade BTC for ETH, or you can do Litecoin, or you can do Rune. So you're actually able to trade these tokens. So it's crazy. It's massive because you don't have to rely on a centralized party. And why is that massive? Well, you don't have to deal with KYCs. You don't have to deal with not your keys, not your crypto. You don't have to deal with just trading with pegged assets, because pegged assets aren't the real asset. How pegged assets work are, well, this is what it is because it's pegged to it. Oh, well, really? It is? How does that work? Anyways, so here's a couple quickies on it. So Thorchain was first imagined in 2018. Eric Voorhees, the guy who's the creator of Shapeshift, he actually speaks very highly about Thorchain. He's saying Thorchain is like just a massive game changer. You guys can see all in his tweets too. He even tweets, there's just one tweet that says, "Bring the chaos." Yeah, here it is. So he's retweeting Rune. So this guy's very bullish on Rune. And guys, Rune is going to be a game changer. So let's go ahead and explain it a bit again. I know it's a little bit difficult to understand, but still it's pretty crazy. So in the paper, it's going to outline exactly how it works, but here's the I guess you can say overlay of it. So first you have the users. These are going to be the people swapping BTC for ETH, etc. Then you have the liquidity providers. So in order to provide liquidity, I'm going to show you on the Asgard DEX. It's similar just to Uniswap, and what you're going to do is you're going to add liquidity by any asset that you peg or put in. It's going to be pegged to the Rune asset. So if you want to deposit BTC, ETH, or USDT, any of the, not USDT, but Litecoin, any of the other exchange or chain tokens or actual tokens itself, you're going to have to bond it with some Rune. So an example of how you can do this, you don't have to have Rune, but it's automatically going to sell your BTC or ETH for Rune to a 50-50 ratio. So a lot of, in the Telegram chat, they were recommending you just do 50% ETH and 50% Rune. So it's probably more efficient just to buy Rune and play around with it, but this is how it's going to work. That's how you can provide liquidity. And why is this important? Well, that creates the use case for the Rune token. So anyone who wants to provide liquidity, so aka earn a bunch of rewards and interest for staking tokens, you need Rune tokens. And also if you want to run up your own node, or I'm sorry, not a node. Yeah, it is a node. Becoming a validator, you're going to need to have 1 million Rune tokens, which is massive. But the barrier to entry is high because the profits are extremely high. They say it costs like $1,000 a month to run a node, but you'll be pocketing like $30,000 a month. So crazy. So we already went over the liquidity providers. Basically, these guys are just like on Uniswap, providing liquidity for the other tokens. And Uniswap is for the long tail. So Uniswap still is something that is going to be used. Thorchain is not taking the place of it. Thorchain is usually or mainly for the small tail, or not the small tail, but the big neck, I guess you can say. It's for the main assets like the biggies like Bitcoin, Ethereum, Litecoin, etc. And then here are the nodes explained. So the three main functions of the nodes are to bond runes, create vaults, and witness transactions. They are fully anonymous, they are fully decentralized, no one is running them, only the people who own 1 million runes are running them. So the nodes earn 2/3 of the system income, and they make vaults and validate transactions. So the nodes are anonymous, and the the liquidity providers get the other third. So now that you kind of understand it, we'll go ahead and explain the Rune token. So they have two types of Rune tokens. They have the BEP2 and they have the ERC. However, on April 13th, you are going to need to move those over to the Rune chain. And there is a bridge to do that, and the Ethereum bridge will expire. However, the BEP2 bridge will stay open for a bit of time. So all Rune tokens are a 1-to-1 ratio to the asset value and allows the pools to be linked. So Rune is also the rewards for the pools. So 1/3 of the system income so 1/3 of the income that's coming in is going to be paid to the people staking onto the network. So not staking, but providing liquidity. So the Rune token is also important for the security because it protects against malicious actors, giving a larger benefit for liquidating. So all the transactions using Rune have double the amount, so 67 to 33% ratio. So basically, Rune will be not always, but you can get the value of Rune. It even says it on their website. Rune is typically going to be 3 times the TVL because each of the assets you lock up, it has to be with Rune tokens. So keep that in mind. Rune has a total supply of 500 million tokens. It initially was 1 billion, but they burned about 500 million of them, or they did burn, of which 100 million were sold to the public in 3 stages, and 150 have already been allocated through the team, community, and operation reserves, and 220 are yet to be released for not staking, but liquidity providing and so on. And there's 2 ways you can earn Rune. First is you can earn it by LP tokens, and second is running a validator node, except that's very costly. You need 1 million Rune. Very expensive. And there are not drawbacks, but risks involved. There are slashing features, so if you're not a good boy, you're going to be losing a lot of your Rune. So keep that in mind. So the rewards are swap fees and block rewards for any of the participants in the network. However, in the future, when all the block rewards are gone, then it's going to be just only swap fees. So do keep that in mind. I'll go over the mission schedule so you guys can see that later in this video. So stay tuned. And currently it's about 67% to the nodes and 33% to liquidity providers. However, there is a pendulum that swings. So the more nodes there are, the more nodes there are, the more rewards goes to liquidity providers. However, when there's more liquidity providers, the pendulum swings to the nodes, so more people draw up a node, and when more people drop a node, it goes down and goes back to liquid. So it's a moving pendulum. That way it incentivizes everyone to move forward. And the team is pseudonymous. So really there is no figurehead, just like Ethereum has Vitalik Buterin, or Bitcoin. I guess you can say Bitcoin says Satoshi Nakamoto, but still, he is a bit pseudonymous. But another example would be like Cardano, Charles Hoskinson, Gavin Wood with Polkadot, and so on. You guys kind of get the concept. But this is how Thorchain is entirely different. This is allowing swapping of native chain tokens instead of pegged assets, or I guess you can, like a good example is ERC20s with the wrapped Bitcoin. It's not actually Bitcoin. So now you're actually able to trade actual Bitcoin for actual Ethereum and actual other tokens. So pretty massive and pretty big game changer. Let me go ahead and show you guys the token release. So Thorchain is built on the Cosmos ecosystem. Cosmos is something I'm very bullish on as well. A lot of people aren't really talking about it, but Cosmos has some pretty good projects, man. Another one is Kava. I talked about Kava on my channel as well, and I don't know, man. People just aren't talking about it. But anyways, guys, Cosmos is pretty fire. But you guys can see the full token release is going to be on 2026. And basically each year it's releasing a sixth of the total supply that's going to be released. So you guys can see how it works. So you see how it rolls out, and you guys can see the breakdown here. So I'll just go to the end. Liquidity incentives, just about 100,000 or 100 million. I'm sorry. Thorchain rewards, or the node rewards, about 56 million. Operations reserve 65 million, community 60 million, advisors and team 50 million, seed investors 30, pre-sale investors 70, IDO investors 7 million. So you guys can get the concept about it. And we already went over the overview and all kinds of garbage, and let's go ahead and get into their GitHub. So I'm very bullish on this project, but again, this is not financial advice. This is just my opinion on the project. This is what I see in it. You guys do what you want to do. I'm not telling you what to do. I'm not your daddy. I'm not your mommy. I'm not a girl too. So, but anyways, guys, here's their GitHub so you guys can see it. We all got big boy pants. Put them on 1 hour ago yesterday. So pretty active. Not super active on the GitHub, but just kind of showing it to you guys so you guys can see. You can see it's got a pretty high TVL ratio at 4.5. But then again, they really haven't launched BTC or ETH on their chain yet. Right now, they're just playing with Bepswap. Let me show you guys Bepswap a little bit how it works. So if you haven't already used Bepswap, well, you can play around with it. You just have to link up. You can do a key store, ledger, or wallet connect. I'm not going to connect either of them. They aren't really popular wallets in my opinion, except Ledger. Ledger's pretty good. But you guys can see right now the liquidity, it's about 151 million. And typically how you get the TVL is going to be however much liquidity is locked up here. So right now Bepswap doesn't have a crazy amount of liquidity. It's not like PancakeSwap or anything, but you guys can see it's similar. So if you want to provide liquidity on Bepswap, this is how you do it. Just like on the Asgard exchange, kind of how we showed you. Well, it's not going to load for me because I didn't link my wallet. But basically all you do is you just add or manage, you add a token, and it's the same. You add a token on both sides. And if you only add one token, it's automatically going to buy the Rune up for you, so it'll do that for you. Multicoin Capital actually is a major investor in their company. It's a major VC, and they picked out some pretty good picks. I'm just going to show you guys Multi-Chain's portfolio so you guys can see. They picked out Algorand, Alpha Finance, Arweave, Audius, Backit, Definity, Diffuse. Well, those aren't really tokens on those, but Helium, guys, LivePeer, Near, all of these ones they've been talking about have pumped like crazy. Perpetual Protocol, Scale, Solana, guys, these guys are big names they're investing in. The Graph, you guys remember how massive the Graph was. It's still massive, but anyways, it's cooled off a bit. So they still have to have the mainnet come out, so they still need to prove what it's going to do. So guys, don't get all bullish and all happy, because what if it rolls out and the mainnet flops and it's a piece of junk? Well, we don't know. Time will tell. But they have tested it pretty hard, and We'll see what happens. So 23% is how much Rune circulating supply is locked into the Thorchain. So if you want to see how this works, how you can get the price of Rune, there's a little simulator you guys can try. So if you guys want to use this, so basically if you want to use BNB, ETH, or anything, just say we'll change by 1. So we'll just say it does a 1x on each of these. And we'll say 3% will be locked. 3% of each. Look, the estimated value of the Thorchain price would be $444. That's just 3% of each. Now let's say all of Bitcoin goes over here because it's decentralized. Not all, we'll say 25%. And we'll leave these at 0. Let me show you the price of Thorchain. Look, guys, $2,908. And why would most people bring Bitcoin over? Well, so the reason why I was explaining to you is a lot of people will look at Bitcoin and then go down the rabbit hole and go on the Ethereum network and then figure out, oh, I can wrap my Bitcoin and deposit and earn interest on it. Now, this allows investors who are just, or not investors, but massive Bitcoin maximalists just to be like, oh, I don't have to sell my Bitcoin. I can just stake it on this thing called Thorchain and then I could just earn Bitcoin? Whoa, this is great. I can lock it up in a pool. Let me do that. So then they do that and then they earn money for it. And then it's like, oh, wow, game changer. Guys, it's massive. Anyways, TVL is basically how you can calculate it. So Rune is going to be 3 times the non-Rune TVL. So if the TVL is going to be $1,000 or not 1,000, we'll just say $1 billion. Rune should technically be 3 billion at a good price. Currently, right now, the total Rune TVL is 75 million. So you guys can see they are a bit overpriced. But again, their protocol is not even launched fully, so do keep that in mind. Just in my opinion, they are a bit hyped, but again, time will tell. And this is the pool assets. You guys can see, you can play around with this a bit, and you guys can actually get in their Discord to figure out how to do it, and you can also run your own node. But you're going to need about 1 million to do that, and be aware of the risks. So we're going to go over it again. I know we talked about it a bit, but here are the 5 distinct superpowers that Rune has. Liquidity, settlement asset. Security, Sybil resistant mechanism. We already talked about the 67 to 33% ratio that they're going to have. Governance, because someone's got to govern in this chain because it's just going to be ripping and rolling. Incentives, it's used to pay out rewards, charge fees, and subsidize gas. And swap fees are going to be massive, so that'll keep the system going even after all of the tokens are released. Amplifier, to elevate the assets. And this explains how they secure. I'm going to explain the 4th and 5th one because several people not struggle to grasp this, but I myself struggle to grasp this. So the incentive pendulum ensures that nodes are incentivized to continually buy and bond enough Rune each time to maximize their gains. Which is a maximum when there is 67% of Rune bonded and 33% pooled into pools. So whenever that pendulum fluctuates and goes over a certain point, then the other side is going to be incentivized, as in higher interest rates, to request for more. So the bond is very liquid. Any Rune holder can immediately enter or exit their position. So there's no lockup periods, which is good and bad. It's good because, yeah, you don't have to like hold your tokens for 21 days or 17 days or 14 days or whatever. But it's bad because anyone can just withdraw and leave. But then again, it's good because it brings competition and it brings incentives and it brings always keeping the best protocol, because if you aren't the best, people are just going to leave. So here's an example. So a node bonding 1 million Rune would never think of the decision to steal 1 million in capital from the network, because they'll lose their overall stake. So whatever they stake and whatever they put in, whatever they try to steal, they're going to be hurt because their Rune's going to be slashed. That's how it incentivizes it. So this is how the amplifier works. The price of the assets is decided by the exchange which is most liquid, which is going to be your Rune. So Rune is going to be the most liquid asset here. Just like Ethereum is on Uniswap, everything trades into ERCs. Rune is going to be the most liquid asset here because every token is bonded with Rune. So do keep that in mind, guys. But yet you'll still be able to trade like Bitcoin for Ethereum and Ethereum for Bitcoin. And this is a breakdown of the emission schedule. If you guys want to pause the screen, you guys can scroll down and look for it. But basically, you guys can see how it's going to work. And over time, the percentage of the amount being released is going to be going down. And the total token supply is going to be 500. They have a ton of links on their website. If this video was not enough for you, well, get on their website, do some research. You can always hit us up in the Digi Squad as well. I'll try to explain what I can. And guys, I really believe this is going to be a game changer. It is pretty massive, but again, it's not financial advice. This is just my opinion on the project. And we're just going to go over a couple more things just so you guys can see these. So fees. These are what's going to be traded on the transactions. So just like Uniswap has the fees, that's what this same process is going to be. And now you guys are looking at, okay, why is there fees? Well, the reason why there's fees is because if there's no fees, then people aren't getting paid to make a transaction go through or make a swap, and then there will be no liquidity. So that's the concern. And this is also very important to the chain, is the continuous liquidity pool. Here's an article breaking down the continuous liquidity pool. So the first problem is there's a tendency for crypto traders to speculate in large markets. So basically what this means is like how AMMs work. If they can find arbitrage or arbitrage the AMM, or they can find arbitrage by buying on one exchange and selling on another. This happens all the time. And with an AMM, it can be fluctuated because on one exchange, someone buys up a bunch of tokens, it causes the price to go crazy high, and then someone on another exchange can see that, buy it from the exchange, and sell them there and make a quick profit. So with continuous liquidity pools, it changes the game a bit, and we'll explain how it works. With continuous liquidity pools, anyone can exchange tokens at any time with no need to contact another token holder. So all of the Bitcoin, Ethereum, all these different chains are going to be coming on here. And this will be massive for a centralized exchange to use as their backend as well, because there's going to be so much liquidity on here, in my opinion, because it's one of those things that's, I would call it contagious. So the more people that catch it, the more people get sick, or aka the more people that use the liquidity and use the protocol, and the more people that hear about it and use it, the more people will then hear about it and use it, and so on. So any token holder can literally place in liquidity and receive it back in Rune. So you can just put your token in and stake it. You don't have to have Rune. It'll automatically buy it for you, and when you withdraw, you'll get all your tokens back without the Rune. So you don't have to have Rune. And at the same time, the mechanism provides fees to the users who provide liquidity. We already explained that. So users will stake their assets and passively earn income, wherever the pools are used. So fees are proportional to the trade side, obviously. So if there's $1 billion in volume and you own 1% of the pie and you get 50% of the rewards, you're going to be walking away with, if it's $1 billion and you get 1%, it's going to be 500,000. So just keep that in mind. And again, another thing I do have to mention to you guys, take a look into their website, do some more research, look into what you can about this. Go ahead and get into the Telegram chat. They're very responsive in there, and they explain a bit over there, and they really do help out. But in my opinion, guys, I really think this is going to be a massive game changer. It has pumped a lot. We'll see what happens on it. Recommend looking into the white paper as well. They do have that announcement coming up on the 13th, April 13th, or not announcement, but they are going live. So it could be something that's buy the rumor, sell the news, or it could be massive pumpage from the news and still go up. But again, we'll see what happens. And guys, if you guys enjoyed this video, if I brought any value to you guys, smash up the like, subscribe to the channel, hit that bell notification. That way you guys are notified every time we make a new video. And guys, Thanks for watching, and we'll see you in the next one. Guys, I didn't miss out. Proverbs chapter 28, verses 24. Whoever robs their father or mother and says, "It's not wrong," is a partner to one who destroys. I don't really need to explain this much at all, but guys, you really owe everything to your parents, because if you came into this world with them, so without them, you really wouldn't be able to be anything. But anyways, keep that in mind, guys. Thanks for tuning in. We'll see you in the next one. Thanks for watching, guys. If you guys are new to the channel, go ahead and hit that like and subscribe button and hit that bell notification. That way you guys can be ahead of the game every time we make a new video. I hope you guys enjoyed that video. Guys, I need you guys to do a couple things. Participate in the quadruple threat. First, set up a Celsius account. Here's a referral link. You guys can use it. Write it down. Type it down. Or you guys can use the link in the description below. Set up a Celsius account. Good for savings. Good for earnings. Don't bet the house on it though. But anyways, you guys can get a free bonus on this. Alright, how do I get this free bonus? Well guys, enter in this link. You guys will get $30. Then deposit $200 in any cryptocurrency. Enter in new 40, like NEW 40 promo code. You guys can use both. And you'll get a total of $70. Guys, that's step 1 of the triple threat. Alright Drake, I did step 1. What's step 2? Alright guys, this is where you can get your small altcoin gems and little game changers. You guys can go to crypto.com. You can set up an account. Here's a link in the description below, or you guys can just type in this code right here on the screen. Deposit some funds in there. You get $25 in bonus crypto. You guys can use that to buy your altcoin gems and have some fun. Step 2 of the triple threat. Or, I'm sorry, quadruple threat. And the third one, this one is a fun one. Voyager. This one is more so where you can buy with limit orders. It doesn't have as many altcoins as crypto.com, but it's really easy to use, easy to set up. And yes, this one does come with a referral link as well. And you'll get $25 in BTC. This is how you can do a limit order. Super easy to use, and they don't charge any trading fees whatsoever. Here's the referral link. You can't copy and paste it, but you can look in the description to copy and paste, and you can put that in and set one up. 25 bucks. Step 4, open up a BLOCKFI account. Here's a link you guys can use. The reference code is 024FFE02. All the links are in the description below. Open up a BLOCKFI, just deposit some funds, and you'll get $30 in BTC. And you can also get that crypto cashback rewards card. Don't forget about that. Game changer, 1.5%. And the first few months, you get a bunch of extra percent. Check it out. This is the funnest one though. Lolly, free. There is a referral link to this one too. I've actually won 100,000 sats one time on one of the taps, which is worth like $100 in Bitcoin. So it's crazy. Look, and there's even proof in the wallet. Look at that, daily stack, 101. Guys, set one up. It's really easy to do. Download a Lolly account and just set it up. And of course, guys, if you guys are a pro, there's a link in the description so you guys can sign up with KuCoin and Binance US to get some trading fee discounts. Thanks.